The bank bill vote underway in the Senate right now.
And joining us now for some reaction out of Washington is Democratic Congresswoman from Illinois, Melissa Bean. She has been following this process every step of the way, had a lot of input in the way this bill was put together. Thank you so much for being here, Congresswoman. Appreciate it.
Glad to join you, David and Liz. Thanks for having me on.
Liz just had an interview earlier today with Gary Gensler, the Commissioner for Commodities and Futures Exchange. When Liz asked him, is this going to stop the too big to fail syndrome that we've been trying to, he would not answer directly. He said, look, at least it's going to bring openness to an area that has been closed. And of course, we're talking about derivatives trading for so long. Transparency is more important than anything else. But he wouldn't be willing to go the distance and say this will stop too big to fail. Isn't that really the fair way to deal with that issue?
Well, I think what too big to fail means a lot of different things to a lot of different people. The challenge we had with some of our large financial institutions is we haven't had, first of all, there was no regulations of derivatives. There was also no systemic risk regulator that moved beyond the stovepipes that separates different parts of our capital markets and looked at the interconnectedness that could create a systemic-wide problem. That is addressed in the bill, along with increased capital requirements, transparency, particularly for over-the-counter shadow market derivatives transactions. So the type of thing that happened with an AIG, for instance, which would fall into that too big to fail category, wouldn't happen again because there are so many safeguards in this new legislation that I'm hoping, and you may know more than I do, that the Senate will be passing any moment now. I just left the House floor, so I haven't gotten the latest. But I hear
they started
it's on,
voting, just
on
so you know.
floor.
They started voting, but they haven't gotten far.
The second we hear, Representative, that it has been completed, we will let you know. But going to actually what this bill does and does not do, the word liquidate is in there. The word liquidate, yes, meaning if something gets too big or it starts to falter and it's a problem, then it could be broken up. It could be, quote, liquidated. But there are also provisions that allow some regulators to decide what's getting too big. That worries some people who are pro-free market. What do you say to that and to quell some of the fears?
I think the issue is not that they're getting too big, but they're getting too risky. And that's where a systemic risk council will be in place to look at your getting involved in some new complex products. You know, we have to adjust your capital requirements or margin requirements to make sure that you're not exposing yourself to a risk that could bring down the entire system. So that's what will be looked at moving forward. But the liquidation authority that you mentioned, Liz, is really important because that's how we move to a no more taxpayer bailouts. If you get excessively risky and you fail, you're fired, your shareholders lose money.
Congresswoman, sorry to interrupt, but we do now have 51 votes. We do now have 51 votes, so it has passed the Senate. Go ahead. What's your initial reaction?
Well, I think consumers and investors can breathe a sigh of relief. They've been demanding action from Congress for almost 2 years now. So I think this is a pretty significant deliverable to the American public, and I think will restore confidence in our capital market structure and confidence to our consumers and investors.
Once again, breaking news. The Senate gets 51 votes to pass financial regulatory reform. Representative, there has been a top banking analyst named Dick Bove who came on here the other day and he said, this is going to cost consumers and banking customers so much more. Is that true?
I don't see where that's coming from. There have been some who've made baseless claims before. I don't understand these claims at all.
He might mean that now they're going to pass on what is onerous to them from this bill to the actual customer.
Well, I think there's some issue where you're going to see we're not going to be writing the kind of subprime loans that were written in the past, putting people into homes that can't afford to pay them. That's a good thing. So if some business goes away that should never have been written in the first place, if we have credit rating agencies that will now have liability and they're not slapping AAA ratings on securities without actually looking under the hood to see what's in there and then putting retirement investments at risk in the process, some of those changes are very positive changes. I think that the public and the markets, as reflected in the market today, are saying that that's all a good thing.
Well, the market's down a little bit today, but again...
Well, last it was up, I think.
No, it's down about 50 points right now. The question of transparency, I think everybody would agree that it's a good thing to have transparency in the markets. That's part of the problem of what caused the financial meltdown was the fact that we didn't have it in derivatives. But the question of bailouts and whether or not, that's the key issue that bugs most Americans, I think. We don't want tax dollars used to bail out millionaires as we had, or even billionaires.
And they won't be.
Well, but let me just quote to you. Let me quote to you a passage from the bill. It's 2,500 pages, so forgive me, but I did get this one line in. Anyway, it authorizes bailouts if the financial institution I'm quoting now is a participant in any program or facility with broad-based eligibility that the Fed has established for emergency purposes. Doesn't that mean there will still be bailouts?
No, what it means is that there are things in place that can be done when someone might be in trouble to assist them out of it. But at the end of the day, no taxpayer bailouts. It will only be.
But
when
hold
we
on
do
a second.
dissolve.
I just read you the passage, Congresswoman. It authorizes bailouts.
I'd have to see the context of exactly where you're getting that from to comment from an informed perspective. But what I can tell you, having read the bill myself, but I don't recall where you're pulling that from, it might be in some subsection that's not related to this principle, is that in the past, what people were frustrated with when AIG failed, because they were non-transparent, because they had no capital reserves to back up their risk,
right.
And it put, because of counterparties, the entire system at risk. Those things can't happen. But should someone find some other place to get risky that we don't see happening, there are tools and mechanisms that we can use to inform them to get their balance sheet in order. But if they fail, they're fired, they lose their jobs, shareholders lose money, and it will be industry dollars that pay for that liquidation, not taxpayers.
Well,
and that's the bill.
The people in the
and the concept that bailouts are going to continue, no one's buying it. It's actually just a laughable premise.
I think it's up for debate, Congresswoman. It is up for debate. Maybe nobody on your side of the aisle is buying it, but again, it is up for debate. But listen, you've done a lot of work over the past couple of months, couple of years really on this. Congratulations on your work in the passage of this. We appreciate you coming in.
I'm very proud of our accomplishment on this one, but I'm most proud of our country, and I think people are going to feel very good about it. Thank you so much for having me.
Thank you for coming on.
Representative Melissa Bean of Illinois, great to have you, and obviously, I hope the rest of the members studied up as much as she did. She sounds very informed and knowledgeable about it.
She has been part of the writing process of this. Interestingly enough, just a little background on her, she was known as a Blue Dog Democrat when she came in, received a lot of criticism from the left side of the Democratic Party for cozying up too much with Wall Street and trying to hone a middle way in terms of figuring out how to regulate or re-regulate finances.